Throughout the ages, gold has been used as a form of currency and a store of value. Gold is regarded as the ultimate symbol of wealth.
Welcome back. Nathan here, and in this video I'm going to be sharing some guidance on how to invest in gold. Gold has been an important investment for over 5,000 years. Today, it is best practice to have around 5 to 10% of your portfolio in the precious metal. But how do you invest in gold? Should it be coins, bars, ETFs, jewelry? We will be looking at what exactly gold is, why it's so important for everyone's portfolio, and then how to invest safely, securely, and with peace of mind. If you like this video, be sure to click that like button and let's get to it.
This video is for education purposes only. You should seek investment advice from a registered professional before making any investment decision. This video is not responsible for any investment actions taken by its viewers.
What exactly is gold? Gold is money. And what exactly is money? Well, there's some characteristics that make up money. Money has to be a medium of exchange, a unit of account, it has to be portable, divisible, and the one thing that separates it from the cash in circulation is that it has to be a store of value. Why is gold important? We are now looking at the purchasing power of the dollar since it was created in 1913. And as you can see, since inception, every year it loses value and loses value and loses value. In fact, the dollar has lost 96% of its value since inception. We are now looking at the gold price, and this is the opposite picture. So you can see gold in the last 20 years has just been increasing in value and increasing and increasing. I personally started investing in gold in 2008, and in hindsight, a great time to get started, as since then the price has doubled, but it's only going to continue to go up, because it has done for 5,000 years. Why do investors choose gold? It's known as the safe haven asset. It does really well in a crisis. It also does really well in inflation. It's outside of the financial system. And it's the ultimate store of value. Meet Ray Dalio. He's one of the most successful money managers in the world. In fact, he looks after over 160 billion of other people's money. Here's what he said about gold. If you don't own gold, you know neither history nor economics. So how do you invest in gold? Well, let's cover the main frequently asked questions. How much should I buy? What should I buy? Where do I store it? What about tax? Where do I buy it from? Let's take a look at each. How much should I buy? Well, this comes down to asset allocation. Remember building our basic portfolio? And it's recommended that you keep roughly between 5 and 10% of your portfolio in gold. Now, some people who absolutely love gold may keep up to 40% of their assets in gold. What should I buy? Simple answer is you want to buy bullion. Here are some popular coins. We've got the US Golden Eagle, the UK Britannia, the Canadian Maple Leaf. These are all 1 ounce coins. And for most beginners, this is the best place to start. If you don't have the money for a 1 ounce coin, you can get lower denominations, and on the end we have the Perth Mint 1 gram. Now, if you do have a lot of money to invest, then feel free to buy the big 1 kilo bars. Just bear in mind, at today's price, these will set you back about $60,000. Some other options to consider: paper gold, ETFs. This is exchange traded funds. Now, there's pros and cons to each of these. Paper gold is great if you're a high net worth individual with lots of money to invest in gold, because you can't store millions of pounds worth of gold at your house. So paper gold does have its place. But ultimately, it's not actual gold. It's paper. It's a contract on a claim for gold. So as a beginner, probably stick to the actual metal itself. Numismatic and collectibles. So there's lots of different numismatic coins and collectible coins, and if you know a lot about this, this can be a good option. However, some of them might do well, some of them you might lose money on, so it takes a higher financial IQ. So for a beginner, probably leave this to the people who know about collectible coins. Jewelry. Now, there's pros and cons with jewelry. The good thing is that it's gold without borders. So you can take this gold from country to country to country, and you're not having any tax implications. You won't have to pay any import tax. You can also get to use this jewelry. You get to wear it at occasions and feel good about your gold. The negative side is that gold is actually valued by the weight. So if you buy £500 worth of jewelry, when you walk out the shop, it might only be valued at £400, because there's a bit of an expense as they cut and change the shape and make it into patterns, and the actual weight of gold is what determines the price. So just bear that in mind. The mining stocks. Mining stocks are great for the intermediate and advanced investors who follow the market, because you can get leverage with this investment. So you can buy the stocks of the gold mining companies. And if gold goes up 10%, some of the mining companies can go up 30%. So you get leverage on your investment. So as I said, it's great for intermediate and advanced, but for the absolute beginner, take a position in the actual gold itself first, before looking at mining stocks. So where do I store my gold? Well, you've basically got two main options. The first one is to store it in a professional vault, and most of the companies that you buy gold from will give you this option, and they will charge you a monthly fee. The other option you have is to take delivery and keep it at home, and there's pros and cons to each. Keeping it at home is great because you get to hold and look at your gold, and you don't have to pay any monthly costs. However, it is then susceptible to losing it or theft. And with a vault, it's very secure, but then you do have to pay your monthly fee. It actually comes down to personal preference, but both of these options are fine. And what about tax? Well, there's two main taxes to look out for. The first one is when you buy. In the UK, this is VAT. In other countries, it's a sales tax. And the other tax is when you sell. So you will pay tax on the capital gain as it increases over time. Now in the UK, we have the Gold Britannia 1 ounce coin. And this coin is great because you don't pay tax on it. It's VAT exempt and you don't pay capital gains tax. Because there's over 200 countries in the world, just be sure to do your own due diligence on your own country and see what tax is applicable. Where do I buy it from? Well, you're going to need a reputable dealer. I have used two companies in the past, Kitco and Bullion Vault. These are both great companies, and two other options which I would recommend would be Gold Silver and Gold Money.
I personally love gold. It's actually one of the only asset classes that has a 5,000 year track record. Okay, so I hope you found this video valuable and helpful. If you liked the video, be sure to click that like button below. That would be much appreciated. To not miss any other videos on investing, be sure to subscribe to this channel. And if you've got any further questions or comments, just post them below this video and I'll see you in the next video. All right, cheers guys.